Hello, good morning. This is ET Now and you're watching Market Cafe. I'm Vinny Motiwala. Along with me is Shreyanti Singh as well. Shreyanti, very good morning to you as well. And good morning to you all viewers as well. Let's not forget that today is Monday. We are hoping that there's not going to be any Monday blues. But in the next 1 hour, we'll take you all through everything that's important and that has happened over the weekend in the global markets, as well as how you should be preparing yourself for the Indian markets in terms of important stocks to watch out for or what brokerages are saying this morning. So yes, Shreyanti, how is the global market handover looking like? Hoping no Monday blues at least, or are we expecting some blues there?
Well, it's very interesting what is happening with the US markets then, because when you're looking at stock futures, what you're seeing is a slight rise in overnight trading, and this was after the market suffered a down week as 2024's rally took a breather. So in the regular trading session then, when I'm looking at the 30 stock Dow, that fell 2.3% last week, posting its worst weekly performance since March 2023. Now S&P 500 as well declined nearly 1% during this period, its biggest weekly loss since early January. The tech-heavy Nasdaq Composite also dipped 0.8%, suffering its fourth negative week in 5. So Winnie, it does look like there were no Monday blues, but there were Friday blues for the US markets. But then the market did end last week on a positive note, however. This was after a stronger than expected jobs report on Friday. The surprising gain in payrolls gave investors hope that a strong economy could continue to support corporate earnings growth, even if it means higher interest rates for longer. For further clarity on how successful the Federal Reserve's fight against inflation has really been, investors are still eagerly waiting for readings for March consumer and producer price indexes later this week. Now, in terms of expectations that are being penciled in for these numbers, what we're looking at is an increase of 0.3% last month and 3.5% year on year. Now, when you look at European markets, then European markets closed lower on Friday, and that was as investors wrap up a lackluster first trading week of the new quarter. So when I'm looking at the Pan-European Stock 600 index, that ended lower by 0.8%. With all sectors and major bourses in negative territory, retail and utility stocks fell more than 2%. And when I'm looking at DAX as well, I'm seeing a downtick of over 1% coming in for that one as well. So that is largely the international handover coming in. But Vinny, how are you looking at crude prices then?
So overall, when you're looking at crude prices, Shreyanti, we had seen that near that $90 around that mark as well for the Brent crude oil prices. Now over the weekend, what we saw is a fall that came in the crude oil prices. As of now, this morning also crude oil prices continues to be below that $90 per barrel mark, around that $87, $88 per barrel mark is what crude is trading at, down almost 2.5% overnight that we saw. Let's not forget what happened and what was the main cause of crude falling was because the Middle East tensions, they are increasing. So Israel, Gaza, Iran, Israel, all those tensions which have been building, and because of these Middle East tensions boiling up, we are seeing that crude oil prices have actually seen a fall. And this morning itself, when you look at it, it's fallen almost $1 per barrel mark. So yes, Middle East tensions which are increasing is causing Brent crude oil prices to see a fall. That turns out well for our Indian companies and OMCs, but obviously the tensions across the globe and Middle East tensions increasing is a concern that one should watch out for. Overall, what happened also was Israel-Hamas sent some teams to Egypt to fresh talks for potential ceasefire that one could expect ahead of Eid. But those concerns are still there. There's a lot of disruption, and because of that, oil prices we saw a rise. And today, this morning also, we're seeing a bit of a fall that's coming in terms of the crude oil prices. So yes, that's Brent crude oil prices. WTI crude oil prices is below the $85 per barrel mark. Let's look at what gold did also and what's gold doing. Gold also has fallen from those record high levels. We're seeing gold trading at $2,329 per ounce mark, down almost 0.6% this morning. Let's keep an eye on that. Silver too trading subdued, and other commodities like copper also are a bit subdued. It's going to be interesting to see how these commodities actually shape up. Metals, they depend more on the China recovery, how that is also going forward. We're going to keep an eye on that. But today, Brent crude oil, gold, the key ones to track are subdued and falling in trade. Brent crude oil, a clear fall that we're seeing, Shreyanti.
Absolutely, and there's a lot of events to keep an eye on then. And on April 11th, back home, of course, the markets are closed on account of Eid al-Fitr. And on April 12th, then there's India's CPI as well as industrial production data. Now, looking at global cues, then on April 10th, there's FOMC minutes, wholesale inventories, as well as CPI and crude oil inventories also. And on April 11th, we also have initial jobless claims PPI data coming in as well. Now, from the Eurozone, April 11th, there's the ECB rate decision, so keep an eye on that as well. And from China, then there's PPI as well as CPI data coming in on April 11th, and on April 12th, there's trade data coming in. Now, in terms of corporate action, there's a host of corporate action to keep an eye on. On Friday, there's TCS that will be kickstarting the Q4 earnings season, and TCS will be announcing final dividend. So that announcement will also be in the spotlight. In terms of other events, of course, there's Biden hosting US, Japan, Philippines Leaders Summit, and there's JP Morgan and Wells Fargo that will be reporting numbers as well. Now, the Bank of England will be issuing report on forecasting monetary policy as well. So all of those announcements will remain in the spotlight as well, Vinny.
Surely we're going to be keeping an eye out on all those events, but let's move on and talk about some of the important things that have happened overnight in terms of jobs data for the US markets. Now, stronger than expected jobs data brought some cheer for the investors. Non-farm payrolls increased by 3 lakh for the month of March, well above the estimates of 2 lakh and at the most in 10 months. Healthcare and the government sector added the most jobs during this month. Meanwhile, in terms of unemployment rate, that edged lower to 3.8% as expected. Even though the labor force participation rate has moved higher to 63%, it's going to be interesting to watch out this US jobs data.
Absolutely, and there's commentary coming in from Fed officials as well, expressing differing views on interest rates and inflation. Fed Governor Michelle Bowman remains open to hiking rates if inflation progress stalls, citing strong payroll growth in the first quarter. Meanwhile, Dallas Fed President Lori Logan also emphasized it's too soon to consider rate cuts, expressing concern about policy assumptions and inflation trends. Now, Richmond Fed President Thomas Birkin also noted a strong jobs report, but highlighted an unbalanced inflation mix, suggesting businesses still seek opportunities to raise prices with immigration aiding job market dynamics.
And Israel has withdrawn most of its troops from southern Gaza, leaving just one bridge amid ongoing talks in Egypt for potential ceasefire. Both Israel and Hamas have sent delegations to Egypt, with Hamas seeking an end to the conflict and Israel vowing to dismantle Hamas after any truce. Israeli Prime Minister Benjamin Netanyahu insists on a hostage release as a part of any deal, while Hamas demands freedom of movement for Gaza residents. Meanwhile, Israel's defense minister stated that troops are preparing for future operations. The 6-month war has taken a heavy toll on Gaza, with 1,000 deaths and ongoing uncertainty looming.
And amid the conflict, Iran has warned the United States to step aside as it prepares to attack Israel. This comes after a suspected Israeli attack on its consulate in Syria. A response from the US is awaited.
And in Japan, real wage continued their downward trend in February, marking the 23rd consecutive month of decline. Government data revealed a 1.3% drop from the previous year, with salary increase failing to match inflation. Although nominal wage increased by 1.8%, base pay and overtime saw a modest rise, while non-scheduled wages decreased.
And switching gears to Motown then, car buyers are shelling out more money for their favorite set of wheels in India, and it is not just the cost pressure and overall inflation. Auto companies are reaping high profits from increasing prices. Sumit Chaturvedi decodes the mathematics behind the expensive luxury cars.
Cars, especially the luxury ones in India, are one segment where price hikes beat all the precedents. Price of luxury cars in India have jumped in some cases as much as 100% in the last few years. As a result, luxury car buyers are digging deeper into their pockets to buy their favorite set of wheels.
For the mass market, I think it's a commodity prices which were driving the or the regulation which were driving the car prices. But on the luxury side, I think luxury side, again, the commodity prices were there. They were introducing the high features, the new technologies, which were expensive. One thing. The second thing, they cannot, they have to increase prices when the mass market prices are increasing. Because if they do not increase the pricing, the positioning of the brands, the global brands will go wrong. And that will be the actually, it will be a blunder for the luxury car makers if they price equivalent to the mass market prices.
BMW's entry-level luxury compact SUV X1's starting price to 12. Entry-level luxury sedan of BMW, the 3 Series, is now priced at rupees 60,60,000, while it was priced at rupees 32 lakh in 2010. Even if you look at Mercedes-Benz, entry-level C-Class current starting price is rupees 60 lakh 85,000, while its starting price was 28 lakh rupees in 2010. The starting price of full-blown luxury SUV of Mercedes-Benz GLS currently is rupees 1.5 crore, while it was priced a little above rupees 80 lakh in 2016. Audi's A4 sedan is currently priced at rupees 45.34 lakhs, while it was available for rupees 25 lakh in 2010. Audi's A6 sedan's current price is 64.07 lakh, while it was available for around rupees 38 lakh in 2010.
There's a general perception whenever you go up, the margin generally improves. We have seen into the hatchbacks also, when the companies were moving towards the SUVs, the margins were improving. So I take a reference from this thought only, that yes, the margin must be improving our side also.
The car makers cite high cost pressure driven by overall inflation and increased commodity prices as the reason behind the price hike plans, and many of the car models are entirely new and not the old ones. This is also another reason the prices have increased. But the main reason behind the price rise sometimes is the high profitability of the car companies. Initially, while setting up the operations in India, companies offered affordable luxury cars to customers, but their focus is now entirely on profitability. However, critics say that a number of these cars have high heavy localization involved, so it is difficult to understand the rationale behind the high pricing. But high car prices are not deterring the buyers from buying the luxury cars, and the luxury car sales in India scaled a record high of 42,731 units in 2023, up 20% year-on-year.
Okay, on that note, let's just slip into a very short break. After the break, we'll tell you all how the Asian markets have opened and a lot more, so don't go anywhere. Welcome back. You're watching Market Cafe on ET now, and let's talk about the Asian markets, how they've opened. Seems like a bit of a mixed opening that one could say for the Asian markets, because when you're looking at it in terms of ASX 200, that's the Australian index, that's on the positive side. But what we're seeing in terms of a bit of a up move furthermore is Kospi is actually muted. It's not much. It's a muted with a positive bias is what we could say. Let's not forget, we'll have a lot of these Asian central banks that will be reporting or coming out with the central bank decisions today, and that's going to be interesting to watch out for. On the other hand, Japan's Nikkei is actually trading quite positive, 1.4% uptick on that front. Now, this week we'll be seeing a Bank of Korea, the Reserve Bank of New Zealand, Bank of Thailand, and the Central Bank of Philippines who will be coming out with their monetary policy this week. So, it's going to be an interesting week to watch out for in terms of monetary policy decisions, especially after the we've seen last week in terms of RBI come out with maintaining their rates on the rate decision. It's an interesting week for the Asian markets. Now, overall, Hang Seng as of now muted with a negative bias is what we could say for Hang Seng. Shanghai too down with cuts of almost 0.4 to 0.5% in a trade. So yes, overall, yes, a mixed opening is what is indicated, especially how we have the handover that's coming from the US markets. We're seeing a mixed opening, at least in the Asian markets. US markets was not bad, but Indian markets expected to open almost on the positive side. We closed on the positive side last week. We were better than the other markets, so it's going to be interesting how Sensex Nifty opens up today. Nifty implied indicating a 0.3% of uptick. Is it going to be a new high week again, Shreyanshi? That's interesting, and surely keeping a close eye on that, but not a bad opening that one is expecting, at least from the Indian markets today.
Absolutely. With the handover coming in, let's see how that pans out for us, right? But we also have a jam-packed lineup for you on the market. At 9:20, we'd be in conversation with Sridhar Shivaram, Investment Director in Arm Holdings, to talk about the markets, the trends that he's seeing in the market as well. And at 12:40, we'd be talking to Sudhir Pai, CEO Magic Bricks, to talk about the robust realty space trends and how they're shaping up as well. At 9:50, we'd be in conversation with Rahul Gautam, Executive Chairman, Sheela Foam, to talk about the growth triggers for the company. And at 10 then, we'd be in conversation with Ravi Chidambar, CEO Tata Autocom Systems, to talk about the exports push, see how the IPO plans are shaping up as well. And at 10:20 then, we'd also be in conversation with Bipin Bhai Vittal Bhai Hadwani, CMD Gopal Snacks, to talk about the company's growth roadmap and see what kind of growth plans the company has as well.
An exciting lineup that we do have on the market for you all, so don't go anywhere. But on that note,
Welcome back. Thank you so much for staying tuned in. Well, let's get a little more stock specific then and look at Vodafone Idea. That will be in focus today as its board has approved a fundraise plan from promoter group worth 2,075 crores. Now, this will be done via a preferential allotment of shares at a premium of 11%. Soumit is standing by with all of those important details.
140 crore equity shares to the Aditya Birla Group entity at a price of around 14.87 rupees. Now, this price is at a premium of nearly 11.6% compared to Friday's closing price. Now, the company is looking to raise close to 2,075 crore rupees from the promoter group, and because of this fundraise, Aditya Birla Group's shareholding in Vodafone Idea will increase to around 19.8% from an earlier 17.5%. Now, however, the bigger board meet, or the much awaited board meet, where they will be looking to raise funds from external investors, and that could be up to around 20,000 crore rupees. That is yet to be announced from the company. However, the company has said that they aim to conclude this external fundraise by the end of first quarter of FY25, which is in the next 84 days, that the company plans to raise this 20,000 crore rupees from external investors. Now, the current fundraise is pretty much in line with what the promoter had earlier committed, that they will infuse around 2,000 crore rupees, and that is what they are doing. But do remember that this fund infusion seems to be just a survival capital, and hence this external fundraise of 20,000 crore rupees is much more important for Vodafone Idea, because that will be the main growth capital coming in for the company going forward. However, there are some big hindrances in this fundraise. Firstly, it's the pricing issue. Now, whether the company will issue this funds at a price which is premium to the current market price or at a discount is key thing that we need to see, because given the fact that government was issued the shares of Vodafone Idea at a face value of ₹10. Apart from this, do remember that this would not be the last of the fundraise for Vodafone Idea, given the fact that in FY26 there is around 30,000 crore rupees of government dues upcoming, for which also company might need another round of fundraise going forward. Apart from that, the history is also not much supportive for Vodafone Idea, given the fact that in 2019 also they had raised close to 25,000 crore rupees via rights issue, and however the company is yet to grow and revive since then. And lastly, if you see the gap compared of Vodafone Idea compared to its peers has been continuously increasing. In fact, the revenue market share of Vodafone Idea has dropped from around 38.5% that was there in FY18 to just 15.6% currently. So that's a big gap coming in compared to the other larger peers like Bharti Airtel and Reliance Jio.
Okay, Soumya, thank you so much for that update on Vodafone Idea. Let's keep an eye out on the stock today. But FY25 kicked off on a strong note, and Indian market has been outperforming peers on a week-to-date basis. Let's go across to Aisha, who is giving us more insights on what's driving the optimism in the markets.
Oh yeah, absolutely. And to everyone's surprise, everyone's wondering, with the weakness that there is in the global markets, what's actually holding up Indian markets. And it's clearly no rocket science, right? First, let's take a glimpse of how India has performed week to date. And we're right on top there, along with Shanghai. And you can see the other markets as to how they've done. Both the FTSE, the S&P 500 index, the Dow, or for that matter, the Nikkei, have underperformed, and quite significantly so. And mind you, they continue to do so even as we speak right now. Now, why have Indian markets outperformed as opposed to our other global peers, barring China, of course, which is more a bottom-up valuation story playing out. Remember, the trading books have just about opened. Last week as well was a acutely truncated one, and you did make those adjustments on your loss-making holdings to try and lessen your capital gains taxes. Or gains rather, so which is why that is one, of course, trigger. India. More importantly, irrespective of the FII selling, look at the kind of DII buying just week to date alone that you've seen. We're already sitting at a 3,000 plus crore rupee figure week to date so far, and today's number is still pending, by the way. The Q4 updates have been very, very strong. Our experts have been telling us as to how deposit mobilization, be it from HDFC Bank, be it from RBL, the smaller banking names, Yes Bank as well have been very strong. Markets have reacted also very strongly to those Q4 updates coming in. And then, of course, you've not had very many large blocks as well coming in. So no FII or FPI money gets also sucked out because of that, in addition to the pressure that you're already seeing from the FII desks. Aside of that, look at the kind of FOMO that's playing out in the market. You were just talking about as to how it's been a 7% move on the small cap index alone. The mid cap index as well has surged about almost 4%. And we already know the Nifty performance, which already made a lifetime high just this week. Also, I must add about what the technical setup is looking like. We're well above the support levels, and we're far away from that 22,200 print when it comes to the Nifty. And look at the kind of Nifty bank outperformance that you've seen, not just in terms of the support indicators, but names like HDFC Bank, which have come back with a vengeance, with almost a 40% contribution on the Nifty bank coming in alone in today's trading session. Not just that, the force multipliers, the large decadal themes, they continue to remain very, very intact for India. So be it the renewed capex cycle, be it the thriving credit growth that we've seen, the fact that our Indian banks are extremely well capitalized. So these are themes which really continue, and the kind of multiplier effect they have, that's not going to fizzle out in a week or 10 days. That's going to remain for, many, many years to come. So that's what is making India shine.
That definitely is all about the growth levers that are making India shine. But moving on then, in more turbulence for Vistara, the carrier has announced a reduction of 25 to 30 flights per day, aiming to stabilize operations amid pilot issues. Following pilot unrest over revised contracts, 98% acceptance was reported. And the airline has also assured passengers of minimal disruption with cancellations primarily in the domestic network. Now, affected passengers have been reaccommodated and on-time performance has improved, and that is what the airline said in a statement as well. The airline is scheduled to operate over 300 flights daily in the summer schedule and is aiming for operational stability in April. So let's see, Vinny, if the airline is able to navigate through that turbulence that they've seen of late.
Absolutely, surely it will be important to see, how they navigate through all this. But, let's move on and talk about CGDs. And this is an ET Now exclusive where we learned from reliable sources that government is relooking at a policy of granting exclusive rights to the city gas distribution companies. My colleague Prakash is joining in with us to give us more details. Prakash?
Yes, an important development coming in as we are learning from our sources that the government is working on a comprehensive policy when it comes to providing exclusive marketing rights to the city gas distribution companies over its geographical areas. Oil Ministry has just started working on this proposal. In fact, discussion has already been initiated. We are given to understand that the Oil Ministry is of the view that there should be proper guidelines in place when it comes to providing exclusive marketing rights to the city gas distribution companies in order to bring more competition in the sector. We are also given to understand that the Oil Ministry in favor of revising existing PNG-RB Act, but it is not in favor of providing extension to the city gas distribution companies for all its older geographical areas when it comes to exclusive marketing rights. In fact, Oil Ministry wants extension should be given based on a rationale, based on a logic. It should not left with open-ended. Therefore, Oil Ministry is not in favor of providing extension to all the older geographical areas belong to city gas distribution companies. Therefore, necessary amendments will be made in existing PNG-RB Act. The process has already been initiated, but the changes will be implemented only after new government sworn in. However, city gas distribution companies have approached a court on this matter, but sources are informing that the Oil Ministry will present its same view before the court going forward.
Thank you so much for that, Prakash. Keeping an eye out on the CGD companies today. Let's move on, talk about Wipro. That's surely going to be in focus. Why? Because we have a change of guard and a resignation that has come in from the CEO of the company, that is Thierry Delaporte, who said that he will be resigning from the company. This came in on 6th of April. He will be available to the company till around 31st of May. But in place of him, we do have a new appointment that has come in. That is Srinivas Palya, who will be the next MD and CEO. This is going to be with effect from 7th April 2024 for a period of 5 years. Let's not forget that the new MD Palya has been someone with Wipro since 1992. So he spent enough time, almost 32 years, has been in many leadership roles for Wipro as well. And when you look at it, obviously, mostly in terms of recently, he was responsible for Americas as well as the Bay, and he was based out of New Jersey in the US. So that's interesting to see. Now, what brokerages are saying is that, the CEO change announcement that came in was something a bit of a surprise, because given that, Thierry Delaporte's time of resignation and tenure was going to be ending in July 2025. Now, Morgan Stanley is saying that they believe this transition could create a bit of an uncertainty in the near term before actually boosting in terms of the hopes of a total potential turnaround that one could expect. Similarly, CLSA also is highlighting that they believe that the new CEO has a tough task ahead to turn around Wipro. They reiterate their sell rating and a target price of 445 rupees. Interesting to see today how we will see Wipro reacting. A bit of a mixed opening is what one could expect, at least is what the brokerages are highlighting. They're continuing to maintain that underperform rating for Wipro, or nothing in terms of a change that they're seeing in terms of the rating because of the new CEO. So let's keep an eye out on Wipro, Shanti.
Absolutely, and this change of guard is going to be very important for Wipro. And keeping it with change of guards then, after serving Bandhan Bank for almost 9 years, Chandrasekhar Ghosh, MD and CEO of Bandhan Bank and its founder, is stepping down from the position once his term ends in July. Ankur Mishra is standing by with all of those important details. Ankur, tell us a little more about this development. Is Mr. Ghosh going to be taking on a strategic role then?
Yes, in a kind of a surprise move, Chandrasekhar Ghosh of Bandhan Bank has decided that he will retire from his post after completion of his term on 9th of July 2024. Earlier, the board had approved sending approval to Reserve Bank of India for his tenure extension by 3 years. This was done last year. Now, this is a kind of a surprise move by managing director himself, that he has decided that he will not continue as MD and CEO after his term gets completed on 9th of July. Now, why that decision has been taken, we have been informed through sources that this decision was in works for a long time, in fact past 1 year, but it was not communicated to board, and earlier a decision was made to take approval from Reserve Bank of India. The reply from Reserve Bank of India was still awaited, and before that MD and CEO of the bank decided that he is not going to be available for next term. In fact, the process for the filling up of the senior leadership position started in past 1.5 years, and therefore you would have seen many appointments at the ED level of the bank in past 1 year. Now that Chandrasekhar Ghosh has decided not to be available after 9th of July as MD and CEO, a new MD and CEO will be searched by the committee of the bank, and you may see a new candidate assuming the charge after 10th of July.
Okay, Ankur, thank you so much for that. So keep an eye out on Bandhan Bank as well. Let's move on, talk about an FMCG major, Nestle. Why are we keeping an eye on that? Because there's a royalty fee hike that has come in for Nestle India. Now, Nestle India's board has actually approved an increase in terms of the royalty due to the parent company that they pay. Similarly, it happens for HUL as well. When you look at it, the parent company, first we used to pay, Nestle India used to pay the parent company 4.5%. Now it's increased to 5.2% of the net sales, and this is going to be a for a period over the period of next 5 years. This will involve overall an increase of 0.15% when you look on an annualized basis in terms of increase in the royalty rate, and this is going to be effective from the 1st of July 2024. So on an effective basis, when you look at it, it's going to be a 15 basis point annual hike in royalty fee, which is, when you look at it in terms of lower than the 20 basis point annual hike that they saw in 2014 and 2019 to 2019 period. Now, relatively, what brokerages are saying, this seems quite manageable. That's not much of a concern. As well as the annual hike is lower than the other peers where we saw a royalty hike was much higher, which was a cause of concern that came in for its peers in the near term in terms of the margin. But that's not the case, seems like it, for Nestle. And what they're saying and what brokerages are comparing also, this is coming in from Macquarie. They said a comparison was shown that the hikes brings India closer to a similar sized geography like Malaysia. Not much of an increase from the 1st of July. 15 basis point annual hike from there on is what we'll be seeing for a period of 5 years, is what is going to be spread across, Shreyanshi. So yes, that's why we're keeping an eye out on Nestle.
Absolutely, and that serves as a reminder for me to have my morning cup of coffee. So tell you what, let's take a quick break then, and when we come back, we'll take a look at some more stock-specific news.
Welcome back. You're watching Market Cafe on ET now. Let's move on and talk about brokerages and what's happening on that front. There's a fall in rates that should help actually overall. Let's go across to Gaurav, who's joining in with us for brokerages, because a lot has happened. So Gaurav, which brokerages, what are they highlighting? What are they saying in terms of Q4 updates? Anything exciting there?
Well, yes. First, let's talk about IDFC First Bank, because Jefferies has now initiated with buy rating and a target price of 100 rupees on this bank. What they believe is that we may see strong deposit growth and loan growth in the coming years, and on back of this, we will see EPS growth in the range of 28% CAGR over the next 3 years, according to Jefferies. They also believe that this will also help bank to improve its ROA and ROE in the coming years. And lastly, if you look at the valuations, they are actually at a reasonable level, and that is why they are being very bullish on IDFC First Bank, where they have initiated with buy rating and a target price of 100 rupees per share. Let's also talk about Info Edge, because now Nomura has maintained buy rating on the company with a target price of 6,210 rupees per share. What they believe is that we will see strong billing cycle in Q4 FY24 also. And at the same time, if you look at Naukri's number, they are actually strong, which suggests that we may see the bottoming out of IT hiring in the coming days as well, and other verticals billing is also remaining strong, and that is why they are also being bullish on Info Edge, where they have maintained buy rating and a target price of 6,210 rupees per share. Lastly, let's talk about oil and gas companies, because according to CLSA, the Goldilocks period in the oil and gas companies is over, and on back of this, they believe that they will prefer ONGC over the other OMC companies like IOCL, BPCL and HPCL. And the main reason being that we have seen fuel prices were cut recently, and at the same time crude has also rallied to its all-time high, I mean the 5 months high levels. And on back of this, they also believe that oil marketing companies will have some kind of negative margin in the coming days. And at the same time, if you look at the valuations, they are quite at a premium range. And on back of this, they are now preferring ONGC or Oil India over the companies like IOCL, BPCL and HPCL. And if you also look at their valuation, and if you also look at the target price, they have maintained its Oil India and ONGC rating at a buy, while they have maintained rating for BPCL, HPCL and IOCL at sell rating for the coming days as well. So all in all, on back of this brokerage note, we will definitely keep an eye on all these companies and see how they perform in the coming days.
Thanks, Gaurav. So we'll keep an eye on all of those counters. But moving on then, let's get you the futures and options roundup. And Ansh is standing by with that snapshot.
Right, so starting with Nifty first. So previous week was actually very positive for market. However, we saw Nifty taking resistance at that 22,500 to 22,550. This 50-point range was acting as a strong resistance. We saw 7 to 8 instances where Nifty faced strong selling pressure around this level. So index needs to give a decisive close above this level to be positive. On option front, we are seeing put writing happening at 22,400, indicating option traders are expecting Nifty to take strong support if we see a down move today. Moving on to Nifty Bank, as you can see in the chart as well, the index is moving in an upward sloping channel, and it is just 0.3% away from record high. However, it is also 1% away from its very strong resistance, which we may face at the psychological level of 49,000. If we talk about index futures, we are seeing open interest increasing by 14%, indicating long build-up, which is a positive sign. Whereas on option front, we are seeing call buying happening at 48,500, followed by 49,000 psychological mark. So index traders are not just expecting index to go above 48,500, but to also to reach around that psychological level of 49,000. Let's also see what FIs did in previous session. They covered some 156 contract. They added 1,400 contracts on downside. So net to net, we are seeing addition of around 1,500 contracts on downside, due to which the total long position has slipped below slightly from 43% to 42.7%, which is a 6-session low. This indicates that FIIs continue to be cautious in the market. Lastly, let's have a quick view on FNO stocks as well. That will be in focus. And we are seeing strong long build-up happening in Mahanagar Gas, Balkrishna Industry and ABB India. So keep an eye on the stocks.
Sure, keeping an eye out on those FNO stocks, but also what are the stocks that one should keep an eye out on in terms of their earnings or, I beg your pardon, Q4 updates, as well as anything in terms of news flow updates?
Right, so Cochin Shipyard will be the first stock in focus, as they have signed mastership repair agreement with United States Navy. Apart from this, Gulshan Poly will also be in focus, as they have received ethanol supply order from OMCs worth 78 crore. RITES will also be in focus, as a company is going to collaborate with IIT Madras for innovation in green energy solution. Strides Pharma's Chennai formulation plant has received 2 observations from US FDA, which is a bit of cautious sign for the stock. Graves Cotton is also in focus, as they have entered into a technological transfer agreement with Suyo to manufacture components designed for low-speed 3-wheeler vehicles. Lastly, Voltas will be in focus, as they have achieved the highest ever landmark of 2 million units of AC sales in FY24. So keep an eye on the stocks.
Absolutely, Ansh. We'll keep an eye on all of those counters, but a whole host of companies have started releasing their Q4 updates also. Sharad is standing by with that snapshot. Sharad, tell us a little more about these updates then.
Well, yes, at first we are having Signature Global, where the Q4 numbers have been very strong, with pre-sales jumping almost 240% and even almost 71% growth coming when it comes to collections. Even the sales realization, that has also jumped up. Info Edge also coming with a strong set of operational numbers when it comes to billings. Tata Steel has come with a largely inline set of operational numbers, but if you look at the deliveries, that has gone up on a sequential basis. Gujarat Pipavav, the container volumes have come on the downtick side of almost 6% degrowth, but on the other hand, the containers which were held by the train segment, that has actually been handled and gone up by more than 5%. So overall inline set of numbers. On the weaker side, we are having Shyam Metallics, because the sponge iron sequentially the volumes and the realization has been impacted, and that does comprise of the larger portion of the business. Now let's move on to the BFSI segment, and Cholamandalam Investment and Finance, they have come out with a strong set of numbers, a good AUM growth, and also the overall disbursements that has jumped almost 17% on a year-on-year basis. Utkarsh Small Finance Bank also coming with a very strong quarter, almost 12% sequential growth coming in advances, and also deposits going up by almost 16% on a sequential basis. Overall, the CASA ratio, that has also improved by almost 50 basis points. Apart from this, Bank of India, Union Bank largely came with inline set of numbers coming in. But overall, if you look at it, the advances and the deposit numbers were flattish. PNB, on the other hand, were weak set of numbers, and actually the numbers have come below what the company's guidance was. And Bank of Baroda also missed their advance and deposit growth guidance, both sides. So both PNB as well as Bank of Baroda coming overall weak set of numbers. And lastly, March for Force Motors numbers have also come. These numbers have been strong. The auto sales are up almost 34%. So this is the entire setup for the Q4 updates coming in.
Thank you so much for that, Sharad. Keep an eye out on all those stocks on the back of their Q4 updates. But several parts of Karnataka reel under a severe heat wave as the mercury skyrockets. Bangalore's rose at around 37.6 degrees Celsius, which is the highest in 8 years, as well as the Kala Buragi district hits the maximum temperature in the state of 43.1 Celsius degrees. Moving on to more updates that we have, TMC Supremo Mamata Banerjee lands in a soup ahead of the Phase 1 voting. BJP files complaint against the West Bengal CM, accuses Mamata Banerjee of using abusive language and violating moral code of conduct.
Meanwhile, the Delhi Assembly is set to reconvene today after a week of adjournment. Last session witnessed high drama with sloganeering on the floor of the House. AAP MLA accused BJP of extorting 60 crores from Liquorgate accused via electoral bonds. And moving on then, first signs of de-escalation in the Israel-Gaza war as Israel withdraws forces from South Gaza as the war completes 6 months. Meanwhile, Prime Minister Benjamin Netanyahu has said that Israel was one step away from victory in the Gaza war and vowed there would be no truce until Hamas frees all hostages.
And with that, we're absolutely out of time on this edition of Market Cafe on ET Now. Let's keep an eye out on how the Indian markets open. Slight bit of a positive bias is what is indicated. But it's a good buy from Shreyansi, myself, as well as the team who put this show together.
In small and mid-cap stocks, nobody wants to sell and everybody wants to get up.
If you like this video, then like, share and subscribe to ET Now.